My name is Molly Shattuck, and this is my 2 cents on the One Big Beautiful Act's no tax on tips and no tax on overtime provisions. You've likely seen the headlines, no tax on tips and no tax on overtime. Sounds great, but is it true? While those phrases sound really appealing, they can be misleading. In reality, tips and overtime are not tax-free. Instead, the One Big Beautiful Bill, or you might have heard it called OBBBA, created two temporary federal income tax deductions for taxpayers who meet specific requirements. Not all taxpayers and not all types of tips or overtime will qualify. There are income limits, reporting requirements, and definitions that must be met. It is important for employers to understand the rules so they can properly report on these things for their employees. It's also important for employees, aka individual taxpayers, to understand how these things work so they are taking advantage of these deductions if applicable to their tax situation. So let's define our terms, as not all tips or overtime are eligible for this income tax deduction. Let's start with tips. What are qualified tips? Qualified tips are voluntary payments from customers and must be received in fields that are customarily and regularly received tips. So think things like waitstaff, hairstylists, bartenders, maybe gig economy workers like your Uber driver or a DoorDash delivery person. If you tipped me, as a CPA or an accounting professional, I don't customarily receive tips. So if I did get a tip, it would not be eligible for this deduction. So you have to customarily and regularly receive tips prior to this to qualify, to have these tips be qualified. So what does not qualify? So just as important to think about is what is qualified. Mandatory service charges, not qualified tips. Also, automatic gratuities do not count as qualified tips. For instance, a lot of restaurants will, you go to a restaurant with your family, you have a big family of 12 people maybe in your party, and they have a little thing at the bottom of the menu that says automatic 18% gratuity added to your bill for parties over 8 or 10 or something like that. So that automatic gratuity does not count as qualified tips because it is not voluntary. So in that case, if you only are giving the 18%, that's not qualified tips at all. If, for instance, you give a 25% tip on your bill, the 18% is not voluntary, not included as qualified, but that 7%, that difference would be qualified. So that you'd almost have to split the gratuity amount on that employee to what is qualified and what is not qualified. So very kind of nuanced there. For tips, the maximum deduction is up to $25,000 per return per year. And there is an income phase out for this deduction in play, which is pretty common for these types of things. So let's move to qualified overtime. What is qualified overtime? Qualified overtime is the premium portion of overtime pay. It's the half in time and a half. And this is the pay that's required by the Fair Labor Standards Act, or FLSA. The FLSA requires overtime, as you probably know, they require overtime pay for hours worked over 40 in a work week. The key term being worked. So a quick example, you pay an employee a total of $3,000 in qualified overtime pay. We're going to say it's all qualified for this example. Only the half or the premium portion is qualified. So this would be calculated as 1/3 of the total qualified overtime pay, or for $3,000 in total overtime pay, it'd be $1,000 that you'd get to deduct in this example. So it does not qualify. So basically any overtime paid outside of the FLSA requirements does not qualify. For instance, let's say you have an employee who took 1 day or 8 hours of PTO in a regular work week. They also physically worked 40 hours that week. So they have a total of 48 hours that week. You pay them 40 regular hours and you pay them 8 hours of overtime. In our example, none of this overtime is qualified overtime for purposes of the deduction. And that is because the employee did not work over 40 hours in a week. So as an employer, you can choose to pay overtime anytime you want. However, just because you pay it does not mean it's qualified for the purposes of this deduction. So the maximum deduction for no tax on overtime is up to $12,500 per year for individual filers and $25,000 if you file married jointly. There's also an income phase out for this as well, similar to the qualified tips. So moving to reporting requirements. For tax years 2026 through 2028, employers must report qualified tips and overtime on employee W-2s using Box 12 codes. And also for tips, you'll also be digging into Box 14 as well to report the applicable tipped occupation code. So under current law, these deductions are set to expire after 2028, so could be temporary. If you are an employer, you want to make sure that your payroll system is properly set up to report these items correctly in 2026. 2025 was kind of a free-for-all. It was do your best. The IRS kind of said that they weren't going to be digging into this too much. However, for 2026, you must start properly tracking and reporting these items. Remember, it is likely that not all tips or overtime are qualified and eligible for a tax deduction. So think back to the examples I referenced earlier. You may need to create separate pay items to correctly track and separate qualified versus non-qualified tips and overtime pay. If you're an employee or a person that receives tips and or overtime pay, it's important that you understand the rules and agree with the method your employer is using to calculate and report these things. If not done correctly, you could be at risk of either under or over reporting these amounts. So it's important to get it right. As you can see, these provisions are extremely nuanced. Coordination between payroll reporting and tax filing is essential. Employers and taxpayers should consult with their payroll and tax professionals to ensure these items are reported and potentially deducted correctly. At Centennial Tax, we are here ready to assist, whether you are an employer who has reporting requirements or you're an individual who is potentially eligible for these deductions. We are here to assist you. That is my 2 cents on OBBBA's no tax on tips and no tax on overtime provisions.